Okay, I think we are live. 1, 2, 3.
Start. Hey everyone, happy to be joining everyone for yet another Bitbns AMA session. In this AMA session, we'll be covering mostly around the most crucial element of around digital assets and cryptocurrencies, that is taxes. So we'll be discussing and learning more about what to work on, how to move forward, where to reach out, how to look out for the taxes that we have for cryptocurrencies and digital assets, and pretty much everything, from how much do I have to pay, what are my tax liabilities, and discussing a very interesting platform that we are working with. And we have Rushina from Binocs. So for today's AMA session, we have Rushina from Binocs. And over to you, Rushina, for a quick round of introduction and learn more about what Binocs does.
So first of all, thank you, Harshit, and just excited to be speaking here on taxes and topics around tax loss harvesting with you. So I'm Rushina, a chartered accountant by qualification, and currently we are building Binocs, which is a crypto tax software, and it's a very, like, only last year in the union budget was taxes announced for cryptocurrencies and virtual digital assets for the first time.
Right.
And since then, we noticed that it's really complicated to really do taxes on an Excel sheet or
That's absolutely true.
manually.
Yes.
So Binocs is just solving that problem, any problem around compliances. So of course we'll talk about it in detail more, but basically it's a crypto tax platform and a portfolio tracking software for the entire, like, whenever you are doing any kind of crypto transactions,
Right.
it can. This is one place where you can track it all and
Amazing.
get the tax solutions.
Yeah, I think generally the question comes around a lot where, when people purchase digital assets, cryptocurrencies, trade, or even buy and sell, they do have a lot of questions around the regulation side of things, and how would they be taxed? Will it be an income? Would it come under the income tax? Would it come under capital gains, or multiple other factors? So interesting to know about how Binocs solves these problems for traders, exchanges, wallets, and individual companies as well. So yeah, I think from what I understand, for example, with from tax loss harvesting, is that it's kind of a strategy where investors try to lower their tax liability to the governments and offset it with capital gains and capital losses. So I mean, I am also very new into understanding how the taxes side of things of cryptocurrency works, and I'm pretty sure our users would also be very interested to know and understand how would they be able to benefit from learning more about taxes and the regulations around cryptocurrency, the virtual digital assets as well. So yeah.
So basically what you mentioned about tax loss harvesting is absolutely correct. So it's a strategy wherein in case you have any unrealized losses, you can use those losses to probably reduce your capital gains for the year. So there are two things to keep in mind. One is knowing that how much gains you have already booked in the current financial year. So this year starts from April 22 to March 23. So what are your realized gains so far? And then knowing that if you are holding something currently which is going into losses. So because this year we have been seeing a bear market, a lot of crypto users may be seeing their portfolios in red right now. And this is the perfect opportunity to do tax loss harvesting and probably minimize their gains for the year, so that because the thing is that in India currently, from what our understanding is, you cannot really carry forward your losses.
Right.
So it's only relevant if you can set off, if you can use those losses to set it off in the current financial year before March ends. So we have like on the app itself, there is a tax planning page wherein you can see all this information that you need, like what is your realized gains, what are your unrealized losses,
Interesting.
with for each asset, how much, what is the opportunity to book certain losses, and how much you can reduce your tax eventually. So,
No, pretty
this is how
interesting.
tax harvesting works.
No, interesting. I think probably because in India there is a lot of gray area in terms of how things are working out, and when it comes to tax harvesting, tax loss harvesting, it's mostly when it comes into U.S. Government regulations, right? So I think on that side of things, we would love to know more about since Binocs is already working on that, and we'd love to know more about how is it different from where when it comes to taxes in India, let's say, and how do they differ when it comes to putting it under capital gains, capital losses, and income taxes as well.
Yeah, so I'll answer both the questions.
Sure.
One is loss harvesting is not a US specific concept. Even in India, even for securities, shares, basically people do
Right.
practice this. So it's across assets wherever there is an opportunity to set off carry forward, and where there is a sale of a capital asset, you can do loss harvesting. It's a way of tax planning. So
Right.
it has to be thought through, like usually see if you're setting off losses in this year, so that means your current the invested value again, because once you set it off, you would want to reinvest so that your portfolio is at the same level.
Right.
So say if I am selling one ETH and booking a loss of say 50,000,
Correct.
I would again repurchase it at that price so that my portfolio remains the same, but my gains for the year decreases.
Mhm.
So in that case, for the next year you may have ETH at a lower price,
Right.
which may in the future again have an implication on tax. So there is more planning involved, and this can be done in India and US wherever you are. So that's one thing, but definitely there is a lot of difference between how the regulations have come out in India as
Right.
compared to US, because it's a lot more mature there. They have been bringing out laws for the past couple of years, and every year there is some or the other improvement, more clarifications are there. In India, obviously, we are expecting a lot more clarifications in the coming year. But to start off with, at least there is some clarity towards how capital gains will be taxed, and most of the users, the basic transaction that everybody does on in the Web3 space is
Right.
trading.
Okay.
So at least we know with regards to trading how we have to pay taxes. So that was a gray area for the past so many years, and people have been calling it as either capital gains or taxing it like how shares are taxed or how debt is taxed, and everybody had a different viewpoint before this budget came out, but now there is some clarity on that side. But from the income side, still it's not extremely clear. Like you mentioned, if say somebody is earning salary in cryptocurrency, or if somebody is getting airdrops or
Right.
mining tokens, so that side is still unclear. But there is principle-based approach that is applicable to this, that just how any other income is taxed. It's not like just because it's not mentioned somewhere, there is no tax on it. So obviously for those things we are still expecting more clarification.
So I think what I understand also from from the point that you mentioned, that since it has income very similar to what we have in capital gains and capital losses with shares, it's very similar to that. To taking into consideration that the gains and losses that we have on shares, it's very similar to what we have in crypto right now at this point of time, right? So I think a little clarity on let's say currently the Indian government has 30% of taxes on the cryptocurrency gains. So it's really interesting to know how the budget also would turn out, because the budget is very near for the financial year, next financial year. So though that would also be very interesting, just to have a light and understanding of how things are working on that side.
Yeah, so you said it's similar to shares, but the only difference when it comes to crypto is it's even more stricter because of the set of carry forward rules. So you cannot carry forward any of your losses to the upcoming years, which is allowed for shares. And also, even within crypto, even though crypto asset is one asset class, the term virtual digital asset was defined in the budget, and it's one asset class. Even after that, inter-token set-off is not allowed. That came out in a circular in November. So, say if I'm earning some profit from Bitcoin and if I have a loss in Ethereum, I cannot really set those two off. So that's still very anti-tax friendly. So definitely on the budget side, there are a couple of things that we are hoping for. Like the sentiment that's going around is not very favorable towards the crypto ecosystem. Like even last week there was a statement by the RBI governor, and the entire year has not been great for the crypto ecosystem anyway.
Absolutely.
Because of that, it's not too many relaxations are expected to, so to say, from this budget, but definitely some more clarifications and probably something around TDS is what I feel is absolutely the need of the hour, because TDS, we didn't talk about it, but there's 1% TDS applicable on every trade that you do. So that has not panned out well in the year. So a lot of folks probably moved out to different exchanges, whereas if this TDS rate would have been lower to say 0.01% or 0.001%, from the government's point of view, it would have still made sense, because the entire idea behind implementing TDS on transactions is to ideally track the users or get the information of the users. So with a lower percentage also that could happen, and people wouldn't have moved out to different exchanges and would have stayed, and probably there would be more TDS recovery than what we've seen so far. So they announced that there's some 60 crores that was recovered from TDS up to December. But if the volumes would have been higher, even with a lower percentage, the government could have reached that number or even more. So definitely the entire community is asking for a relaxation on the TDS side.
Yeah, I think, and at this point of time, I think when the question comes into managing taxes, let's say at this point of time, where we have been seeing a lot of changes from the government side as well, on the budget side as well, and people are asking questions about TDS. So we do get a lot of questions. For example, when I buy crypto, let's say, and on using a on-ramp solution or a buy and sell solution, right? And when I sell it off, there is a 1% TDS which is cut. So I think a lot of questions comes around from the user, especially to understand how that that TDS also works when it comes to buying and selling of cryptocurrencies directly.
So basically, so what the section 194S reads is that every time a buyer is buying cryptocurrency, they should deduct 1% TDS and deposit it on behalf of the seller. Now that becomes very complicated, and that's why they had circulars wherein they bought exchanges in the picture, and how exchanges could ease the problem for the buyer and seller, because they may have the information on both sides.
Correct.
So exchanges are really playing a crucial role right now, but it's not that it was their responsibility in the first place.
Exactly.
So now they are deducting, I'm sure Bitbns is deducting 1% TDS, which is actually the buyer's responsibility, depositing it on the sellers, against the seller's panel. And then as a seller, I can always go and cross-check this TDS on the income tax portal itself to see whether Bitbns has actually deposited this 1% that was cut. And the same thing, they can also, when they link the Bitbns account to Binocs, they can even check it on Binocs that whatever TDS has been deducted throughout the year, that will be displayed as a TDS.
So yeah, since we've already come up to the point where we would love to know more about Binocs, and our users would also be happy to have like a product feel of how Binocs works, and how does Binocs solve these the tax related issues, let's say, or at least not resolve it, but it gives an understanding of to the user to understand how his tax liabilities would work out. So I think,
Yeah.
yeah, we could probably, I mean, you could probably share the screen and give us a picture of how the tax planning on Binocs looks, and what are some of the features that our users would be able to use. So
Sure. So,
amazing.
I've just taken the liberty to log into an account. So the login is very simple. It's a no KYC login. You just need an email ID to create a account on Binocs. On creating an account, you can connect multiple exchanges, wallets, chains to this place, so that whatever you connect here will always be read only. We don't really have access to your data, and
Right.
once you connect it, you can see all your transactions in one place. So I will just connect a Bitbns account. So with Bitbns, it's a very simple connection. If you have an account on Bitbns, it will directly read it. Just connect a Bitbns account.
Right.
It's really just 2 steps and the account is connected. With addresses also, it's pretty simple. You just have to add your Ethereum public address and it gets connected. So the connection might take 10 to 15 minutes depending on how what is the quantum of data there.
Right.
Once the accounts are connected, I can see all my accounts here in one place, and it also points out if there are any warnings or say any
Interesting.
server issues that happen during the syncing. So it could be both the things. It could either be some server issues that happen when you're warning on, or it could be that situation. Like, say for example, if I receive transactions from an external party, it will ask you what is the nature of that transaction. There is an option to edit and say call it out as it's a gift or it's a payment receipt.
Right.
Those things you
Interesting.
can go to reconciliation and just reconcile accounts. After that, this is the dashboard. So that dashboard is divided currently into 2 sections, wherein you can see your current dashboard, what is the invested value, what is the portfolio value, and so on. So this is like the unrealized gains, and on the right hand side is where you can see your tax summary.
Tax overview.
From the time I have linked my accounts,
Yes.
what it will give me a tax summary of even the last year, the last to last year. So whatever data I have connected, I get tax summary of all those years. Because in India we have a bifurcation of what can be set off against what. There is a division here in capital gains and capital loss. So gains are different from loss. So at an asset level, it is calculated. So if say I have overall gains from hunting, it will come in capital gains.
Right.
And if I have an overall loss, it will come in.
Oh, for a moment I thought probably the capital losses is like very similar to what everyone is going through right now. So
The
the
difference
right.
here is it will be the book, whatever is booked. So
Right.
of course we all have notional losses that we see on the portfolio, but
Right.
it may or may not have booked it actually. So on the tax side you only have to pay when you actually incur it.
Interesting. So when it comes to let's say BNS users, how would they be able to plan their tax and understand how would it work for them? Let's say, I think you already showed how does the BitBNS account connects directly, but also to understand on the tax planning side of things, I remember that there is a section which also talks about the tax planning for the whole year.
Yeah, so basically the tax planning is trying to make best use of the tax loss harvesting. So like I mentioned, you require 2 things to plan out
Okay.
your tax loss harvesting. One is, so this has to happen on an asset level currently because of the set of tools that we have. So on an asset level, say I will take the second example of USDT.
Mhm.
If I have a realized gain in the realized gain column, so I have made some 600 profit in USDT, and currently I see that there is a 30 rupees unrealized loss. So what I can do is just sell this off book the loss, reduce my realized gains by that much, and again repurchase it if I want that to be in my portfolio. If I want the same quantity in my portfolio, I can repurchase it again, obviously. But I would have reduced my overall gains, and I would have, that's why, reduced my tax liability also. So the numbers that you see here are all like best numbers, and that's why it's small. And I'm sure your users have a lot more gains and losses. So this can be actually very useful to see everything at one glance, what is the current scenario, and then decide on whether there's any opportunity to reduce on taxes.
So I think also interesting to know here as well that since it connects with multiple exchanges, I'm pretty sure that it also has options where we saw that it can connect with wallets as well, exchanges and individual traders. How would they, let's say if we take an example of individual trader, would they have to connect their account with Bitbns or any other exchanges that they're working, and then get the tax planning very similar to what you had showed here?
Yes, absolutely. So you can connect, and it's recommended to connect all your accounts and exchanges and not miss out on any of them, because what we know that usually there are wallet to wallet transfers also.
Right,
and
exactly.
especially when you have a decentralized wallet, you may have bought it in a centralized one, transferred it there. So it's totally required to connect all your accounts and exchanges and wallets so that you get a perfect view of it. And there is a smart tagging wherein if you have transferred from one of your wallet to another one, it just tags it as a self-transfer. So there is no tax on that.
So let's say, I think when you mentioned transferring from one wallet to another wallet, this could also be in terms of where I'm giving a donation to an organization, let's say, right? Or if I'm giving a gift to someone else, right?
Yeah.
So in that case, would those transactions also be taken into account as gifting side of things, or let's say, and would it be considered under taxes as well? Because I think users are doing that multiple times in a day. They transfer wallet to wallet as well. So that is a sort of thing which users are would also be interested to know if those also come under taxes, or if there's clarity on it or not.
So definitely such things happen, and every time you transfer out, so in the reconciliation, like I said, you can definitely tag all of these things.
Right.
So say if I have done a transfer, it says that it's an external transfer, but as a user only I know whether it's a gift given, it's a donation, it's a payment. So I can just edit it and say it's a gift. And then depending on the tax regulations, we have currently defined how a gift has to be taxed, how donations will be taxed. So of course it's not very clear from the government's point of view. We don't know, but going by the general law, a gift is not, when you give a gift, it's not taxed in India. In some other countries, every time you also give a gift, you have to pay tax. So we don't have to pay it, and when you mark it here as a gift, it will automatically remove it from your tax calculations.
Right. No, interesting to know the breakdown of how Binocs is helping out exchanges and individual traders in terms of breaking down all the transactions and giving an overview of how taxes could be, how much tax could be liable to a user or a trader, and how to plan it accordingly. And then very interestingly, what comes into my mind is about NFTs. I think that is something where a lot of folks in the community, a lot of people who have been buying and selling NFTs, pumping NFTs as well. So I think that is something which our users also would be happy to understand more about it. And I know that it's a gray area for a lot of countries, and how would that come into picture when it comes to Binocs, or as a user, if they want to look out for those transactions as well in NFTs that they've made. And obviously under NFTs they've also made losses and made profits as well. And how would that also help the users plan their taxes accordingly?
Yeah, it's a great question. When you ask about NFTs, you're asking on behalf of a lot of people. So
Absolutely.
I understand that it's what It's actually defined. So when if you see the definition of PDA,
Right.
it includes any cryptographic token and NFTs and
Mhm.
any other thing that they may specify from time to time. So NFTs are definitely part of PDAs and taxed. So if NFTs are traded, they are taxed in a very similar fashion as cryptos, and it will be 30% tax on the gains. Again, no set off and carry forward, and same rules apply for NFTs as well. And from a creator's point of view,
Right.
somebody who's creating NFT and selling it and probably earning royalty on it, that
Mhm.
side, the act is still very strict on it. So they will have to go based on the best judgment of how it should be taxed. But of course, again, NFT is something that will be incorporated into Binocs very soon, probably by end of Feb. Because we understand that March onwards is when people will actually want to use and will have to use a software like Binocs, and before that, even NFTs will be here, and it will be similar tax will be defined what are currently applicable in India for NFTs. So it will be again very similar to how you connect chains. You will be able to connect your NFT wallets, and it will automatically detect
Cool.
all the transactions that have been incurred.
No, interesting. Pretty. I think that is one of the gray areas where a lot of folks in the community, they also uh, want to learn more about on the NFT side of things, especially when it comes to taxes as well. And since we have a very big young generation, or let's say young folks in the community who are trading, buying and selling digital assets, and when it comes to, let's say, a student, right? So uh, he's able to. I mean, he's transacting on in any of the exchanges. He's trading. He's buying assets. Would that also come under for them for a student? Uh, would they also have a tax liability that they have to show? Because I think this is kind of a generic question where people, when they start trading, they are. I think in the space, a lot of people are very young, right? And they start trading at a very early age, let's say 18, 19, 20, and that is one of the questions that comes into my mind as well. If there's a student who's buying and selling NFTs, buying and selling crypto assets, and how would they be taxed? Would they be liable under income tax? Do they have to file it, or how would that be in that case?
Definitely, I think again this is a very relevant question because the gaming community is so large. The
Exactly.
community around NFTs is so big, and a lot of people who are probably not earning from are still in school and colleges may be making income here. So
Exactly.
unfortunately, they will have to pay taxes at the rate of 30% here because ideally in the Indian income tax there is a basic exemption of up to 2,50,000. That if you're earning below this limit, you don't have to pay taxes. You don't even have to file your return. It's not mandatory. You can always file your returns, but it's not mandatory. But this is a special category, just like
Mhm.
lottery winning is a very special category.
Yeah.
But irrespective of whether you have any other income or not, you have to pay taxes. So it's going to be similar for any crypto trader who doesn't have any other source of income. Considering they are students and still not working elsewhere, they will have to pay taxes on all their gains arising out of NFTs and cryptocurrencies.
I think so. Even the youngsters are in under the tax liability side of things then. But yeah, I think taking into consideration how the law enforcement is working towards regulating it altogether, and then building that whole infrastructure and skeleton for getting like clarity on the taxes side of things, and obviously because at the end of the day, a lot of exchanges, a lot of wallets, a lot of these merchants in the space get affected when there's gray area in terms of regulations, clarity, and the taxes side of things as well. So good to know that I think pretty sure the users are. I think all the viewers right now would be a step ahead to understand how the taxes would work, and they would have lot of questions as well. So just a few other things. Since you mentioned in the first part of the conversation that if you receive income in crypto, let's say not exactly in crypto, but stable coins, like for example, right?
Yeah.
So a lot of these folks who work remotely or who work, in a remote environment, they do receive, salaries in crypto or salaries in USDT, a stable coin. How would that be when it comes to filing taxes at their end, because it's still an income, right? Although it's not directly into the bank account, but it is still an income.
So again, this is very interesting because currently, whether it's a stable coin or a cryptocurrency or
Right.
any coin of that sort, everything is comes under the plain blanket definition of PPA. Ideally, in future, they may divide it like stable coins, maybe like debt, or other cryptocurrencies may be treated like equity or some sort of
Right.
a division within the asset class, because this asset class is really huge and it's very different. Like not one token is not similar to another
Exactly.
token. So currently there is no such classification. So if you are earning in stable coins also, it will be similar to you earning in any virtual digital asset. So again, on the income side of things, like I said, it's not very clear on how taxation happens, but this is the market understanding that we've seen in coming from tax experts across India, is that anything that is earned as an income in cryptocurrencies will ideally be taxed as any other income, because you're just receiving your salary in kind. You're not receiving it in fiat, but in a different form of kind. So this is the understanding, but of course there's a conservative approach where there are some chartered accountants who think this should be taxed at the rate of 30%.
Right.
So it's still a debate, but
Right.
it's leaning towards treating it as an income.
Interesting. I think this would also put forward a lot of clarity on people who are working around the world in USDT, and they would be considered under the tax liability as well. So under a income tax liability, of course. So good to know that as well. And I think going back to a few questions on also on the TDS side of things, right? And then I do get this question a lot, or let's say I do get these questions that I ask myself, that okay, generally what happens is when TDS is 1% of TDS is cut, right, in with the exchanges, with wallets, or whenever there's a transaction, especially with the exchanges, I think, right? And is there a way to claim all of those TDS at an individual level? And I'm pretty sure that the viewers would also have this question to understand if there is a possibility to claim those TDS, or how do the TDS is structured in terms of when it comes to doing the tax planning and getting or let's say planning the tax on Binocs, right? And how would they be able to claim TDS that has been deducted? Is there a way to do that?
Of course there is. So TDS is not to be confused with your actual tax liability. TDS is different from that. It's basically a means for the government to get some tax in advance, so that they don't have to wait for the end of the year to get their revenue. So tax acts as a major source of revenue. The income tax is a major source of revenue for the government, and for them to get it continuously over a period of year, there is something called as TDS, wherein just the sources of your income are identified and directed. The government directs them to deduct something in advance and deposit it on your behalf. So this is to be looked as just tax paid in advance on your behalf by somebody else, by a third party, or by somebody who's paying you income. So there's full possibility of you getting a refund of this TDS that has been deducted by your exchange or by a user.
Yeah.
So when one is filing their income tax return, this TDS is compared with the actual tax liability. So say if my actual tax liability is only 10,000, but the TDS that was deducted over the year is say 15,000. So this gets adjusted with my tax liability and I get a refund of the 5,000.
Interesting.
So definitely there is this can be claimed back as a refund. The only rule here is you have to file your income tax refund. It's not like you will still get it automatically without filing a return.
Exactly. I think that makes it clear for a lot of viewers and obviously for a lot of traders in terms of getting the tax TDS side of things clarity. Right? There is a possibility to get a refund on that, but again there are certain things that one has to take care in terms of filing their income tax. That is more important as well on this side. And yeah, we've kind of covered the majority or side of things on the tax, like when it comes to TDS, when it comes to income on taxes, when it comes to capital gains, capital losses. So one question that I had, I think probably the second last question that I had was what is the downside that we face, let's say, of tax loss harvesting?
So the downside is basically, like I mentioned again, that maybe in the upcoming years your cost of acquisition would have been lower,
Right.
and that you may incur more profits when you book it eventually. But I would still not say it's a downside because you are able to defer your taxes to say next year or even next year. And what if the tax rates reduce by that time, or what if there are
Right.
better laws around setting off and carrying forward? So if those are like, we are going with an optimistic view that things will
Right.
get better in the future, and that deferring tax may eventually incur like come to paying lower taxes in the future. So it's not exactly a downside, but yeah, you may, like when you rebuy it currently, you may buy it at a lower price than what was actually your price.
That's interesting to know as well. So cool. I think we've kind of covered a lot of things. We would go ahead and share some of the questions that the community has. Please post those questions, and the viewers, any of those questions that are there, we'd love to take some of those questions from the viewers, from the community, to understand more of on the taxes side of things, or the TDS side of things, or NFTs, wallets, exchanges.
Prakar.
So just a second. So yeah, I think Prabhakar, we have one of the questions from Prabhakar which says that will this dashboard that we have on Binocs also capture the Uniswap and NFT trades, right? So we had talked about the NFTs. I think that you mentioned that it will come very soon on the platform. You'll also be supporting that. But what about the decentralized exchanges, right? Would that also be covered, or since it is at a wallet end and directly with the exchanges, how would decentralized exchanges come into picture when connecting with Binocs then?
So of course we do support decentralized exchanges, and it is again, there is a layer built on Binocs wherein we
Right.
even understand whether it's a lending transaction or a borrowing transaction or a swap, or
Right.
whether it's staking. So all these things are understood. So if you just connect your Ethereum account or any chain account, whatever transactions are done on any DeFi protocols also will
Right.
be understood by Binocs.
Interesting. So yeah, I think I'm pretty sure a lot of these folks in the community are also transacting on and buying and selling on decentralized exchanges. I think the majority of transactions also happen on that, right? A lot of interest that is generated as well. A lot of staking, farming that happens on that side. So good to know that even I mean, it is based on the chain. Let's say once they connect their wallet, the transactions are able to be. Binocs is able to read those transactions and give an overall, overall a holistic view about all the transactions that one has done, or either be it on NFTs or DEXs or exchanges. Most of it covering, or even
So
wallets. In fact,
yeah, so one thing I actually missed out on showing is there is actually a divided portfolio between your spot holdings, your DeFi holdings, your lending, borrowing holdings, your
Right.
NFT holdings, LPs, derivatives, staking. So the second tab on the Binocs app, you can
Any more
see
questions?
like a like your entire portfolio divided into these different strategies, and you
Right.
get a very detailed picture of what your current holdings are actually.
Interesting. I think that I mean, is it already live or yeah?
If I may, I'll just share it on.
Yes, absolutely. I think the viewers would also be, I mean, the community would be happy to have a quick look on that side of things as well. So,
yeah, so this is going into detail. So this is my overall balances that I have in the wallets and accounts that I've connected. Then I can see what is actually in spot, then what is in lending. So if there are any open lending positions, lending or borrowing positions, I can see all of them here. So again, like you can see, if it's done on Aave, on Compound, on Maple, on some more DeFi protocols, so those are understood by the software, and you see a detailed picture of what your lending position is, what is the current balance, how much is the interest that you accrued or interest that you have to pay, and all of this again is also understood from a tax point of view. So if there is an interest that is accrued, it comes in the tax report also as an interest.
interesting. Yeah, I think this does give an overview of everything that has been done on chain, right? And getting everything together to give you a good understanding on how your tax liabilities would be, how would you be able to offset those taxes, and find opportunities to save taxes as well. So yes, I think even with coming to the end, I think we do have something interesting for our users and for our community. So I think Rushina would love to share that the giveaway that we have, something to give back to the community as well.
So this is especially for Bitbns users. Once you connect your accounts to Binocs, we want to give away $250 as the full price to top 5 users that have highest unrealized gains. So that's something that you can see on the tax planning page or on the main page, whatever is your whoever has the highest unrealized gains. We're looking forward to users who are actually making gains in a bear market like this. And the top 5 will be dividing this pool of $250, and we'll be getting it from our side. Once you connect your accounts, we'll know the users who connected their Bitbns accounts, and we'll be reaching out to them separately.
That's amazing. I think this is a good opportunity to also help the community, in fact, understand and push them onto understanding the whole taxes side of things, especially when it comes to VDAs and cryptocurrencies, right? So yeah, so this is something that Binocs is running for Bitbns users. Make sure that you go to Binocs, and check out the platform, and also log in and see your tax liabilities, your trades, your tax liabilities. But do log in from Bitbns account, because this is specifically for Bitbns users as well. I'm pretty sure we'll have a lot of users coming on board and learning more about their tax liabilities to understand how can they take this forward in terms of filing income taxes and getting the returns on TDS as well. So yeah, I think any sorry. Okay, cool. So I think we before wrapping up, I just wanted to thank Rushina for joining, and joining from the Binocs team, giving us a great, a good discussion on how taxes work and how the tax loss harvesting, side of things work as well, and about the Binocs platform, how Binocs helps in planning the taxes, tax liabilities, and of course, since it's spread across multiple platforms and multiple projects, right from exchanges, decentralized exchanges. We've talked about NFTs. We've talked about donations, or we've talked about transactions from wallet to wallet. A lot of things that we've covered in in this 45 minutes. And thank you, Rushina, for joining us today for this for Bitbns EMA session. And I'm Harshit. I head growth at Binocs. I know I'm a little late, but thank you for joining us, and look forward to seeing more users on Binocs through Bitbns, and then participate in the giveaway as well.
Thank you so much, Harshit, for hosting us here, and it has been wonderful. The kind of questions you covered were very relevant, and I'm sure our users have benefited from it. And we are always open through multiple channels to answer any questions. Like there's a support channel on the app itself, because we know that there are going to be a lot of questions coming in, still more questions coming in once they
Right.
start connecting accounts and understanding how the taxes work. So, connecting and integrating your exchanges is a free step. So you all can just connect your accounts and see your actual tax liability at this point in time. So it's very real time. So you get to know what at every trade what your taxes look like. So. Open to providing support at any point of time, and really happy that we spoke about actually the need of the hour once March ends.
I think the budget is also very near, so a lot of traders, a lot of people would be eyeing out on the budget session as well.
All eyes on the budget.
Yes, of course. All right, thank you, Rushina. Signing off. I'm Arshit, and we'll catch up in the next EMA session with BitBns.
Thank you so much.
Thank you.